Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it's December 11th. We do basically just one item here for the economic calendar, and that is the CPI, or Consumer Price Index, for the month of November. So this is the headline number. We had a 0.4% growth or increase in the month of October. Forecast was called for 0.2%, and it exceeded that 0.3% for the month of November. So it's a year-over-year rose from 1.8% to 2.1%. So it had a pretty big increase there. Now, when you strip out the food and energy, we get what they call the core CPI, and this is really what the Fed will be gauging when they look at these inflation data here. And basically across the board, as you can see here, it rose 0.2% across the board. So October 1.2%, continuing that trend, meeting at forecast. However, it's year over year remained unchanged at 2.3%. Now, this is one we do look at. It does weigh on the markets. However, the Fed doesn't give as much weight to this. Its favorite gauge is to look at the PCE data here, and even though I do look at this one, but they give a little bit more weight to the PCE. And then later today, speaking of the Fed, they will be giving their announcement around 11:15 Pacific Standard Time, and it's wrap up their two-day meeting. Tomorrow we'll have the ECB with Christine Lagarde, who will give her first policy announcement tomorrow. So investors will be waiting to see what she says, and they want to try to get a kind of a view of what where she's going to be at. If she's going to be more bullish or hawkish, bullish or hawkish, or bearish, excuse me, are the ones they're looking at, or dove or hawkish is really the two words I was looking for. They want to kind of see where she's at. They've seen her with IMF, but now she's with policy with the ECB. They want to see if anything changes or where her viewpoints or where she sees things will be going with the ECB. Let's jump ahead to the headline now. It's actually a little mixed ahead of the Fed meeting. Dow's the only one that's in negative territory. It's been kind of dropping further and further. We do have a few earnings being reported, so that from corporations. So this is also playing a little bit of a part in things, but essentially they're waiting for the Fed to release theirs, and we are not expecting any rate cuts or rate hikes. We're just kind of waiting to see what they say. So let's see how this is affecting the bond market. Bond market is slowly increasing. We may see improvement. We're approaching the triple layer that we broke through earlier this week, and right now we're up about 11 basis points. This may lead, I don't think it's going to be quite there yet, but this may lead to lenders to price for the better. We may see a little better pricing, but we're on that verge right now with some better pricing. So we'll have to kind of wait and see, but I think they'll wait until after the Fed meeting to see where the markets go before they make any price changes. But we may see, it's a possibility we could see some price improvements here. Here's the yields. Yields have come down a little bit. It's resting on the 25-day moving. It's at about 1.81 level here, and that's pretty much a wrap. So again, right now, rates are unchanged, but could be knocking on the door of rate improvement later today. I think you will have to wait until after the Fed gives their announcement before any such action will take place, if it does occur or not. So that's pretty much a wrap. And if you guys are looking to buy or refinance and you're located in California, I'd love to hear from you guys. We help out a lot of people, and we'd love to help you out as well. So just go ahead and contact me, either email or direct message. Email, you'll get the fastest response. I am a mortgage planner with Pinnacle Home Loans, and I'm sure there's ways we have the programs that could best suit you. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.